Joining me now is Anderson Capital Management Chief Investment Officer Peter Anderson, and joining the conversation all morning long, Wall Street Journal senior writer John Hilsenrath and Ironside's macroeconomics managing partner Barry Knapp. Gentlemen, what a pleasure this Monday morning. Peter, what are you expecting from earnings this week?
Well, a lot of surprises, Dagan. I think, people will be looking to see what the narratives will be about the future, the next quarter. So many moving parts. The supply chain issue hasn't gone away. The war and, of course, the threat of COVID and lockdowns. And now on top of it, this Twitter situation that I think, although it might be contained to Twitter, I think other investors will look more closely into this and get a rare glimpse of the soft underbelly of a lot of directorships out there and the dysfunctionality about how people make decisions at the board level.
Well, you talk about Twitter. Twitter adopting, this was on Friday, adopting a poison pill as the board votes unanimously to dilute the company's share value following Elon Musk's $43 billion bid to acquire the company. This poison pill measure is to prevent Musk from accumulating a stake of north of 15%. Peter, what do you make of this, the future of Twitter? And again, the board and the management is desperately clinging to this their money-losing decision of making. I laugh, but again, I can smell the lawsuits from here, assuming that another suitor doesn't come in with a better offer.
There's a lot of things we can smell from here, Dagan, and you are right on. I think I'm actually pretty excited about this because I think this will show, Twitter itself, the dysfunctionality of the board. I hope they're listening to our conversation because in Corporate Governance 101, the board does not own the company. They represent the shareholders. I thought we all knew that. And for them to dismiss this kind of approach in such a short, period of thinking this over, less than 24 hours, and coming out with frankly, a 1980s defense of a poison pill, really gives us a sense that in that board, my projection is everybody's getting along to just go along. And it's really hard to have an independent voice in a board to give a contrary opinion. Now, this has been a lot of personalities, right? I mean, it's very exciting to talk about the possibility of, the new father of free speech if Musk succeeds. But besides that, this is just more of a legal and ethical matter, right? It's not just about the popularity of the personalities, which is very intriguing and very seductive to talk about. But on a more fundamental level, we are talking about corporate governance. What is the right way? What's the best way, best practices to be on a board of directorship? And I think we're seeing now that Twitter really needs to be overhauled completely.
John Hilsenrath, jump in here. The company's lost massive amounts of money in the last couple of years. What are they clinging to, Hilsenrath? Twitter lost $221 million last year, and then it lost over $1 billion in 2020. What say you, Hilsenrath?
Right, and I think the point here about the boards and the board's responsibilities is a really important one. They're supposed to be representing shareholders, and Elon Musk has come along and offered a better deal for shareholders. And, I think they have to have more to say than just presenting a poison pill. What's the alternative for them? And I think it's also going to be interesting to see how Elon Musk responds to this. Does he raise his bid for the company to an even higher level, to a level that makes it impossible for the board to say no? If you look at that chart, the stock price was up in the 60s not long ago. So, maybe he needs to sweeten the deal a little bit. I mean, that's the way some of these 80s deals got resolved. The buyer just kept in and came back and kept pumping up the price.
Right. And it was unbelievable, Peter, what you saw in the action last week, the day that Elon Musk made this offer for Twitter. The offer was 18% higher than Wednesday's closing price, and then the stock ended down 2% on Thursday.
Yep. So let me just add, Dagan, you know, Musk has some work to do also, right? I mean, it seems a little bit glib about the way he presented it, which of course we're all getting used to his rather unusual and sometimes humorous approach. But let's just get one example. So, you know, he polls Twitter users, and he will say, well, I've asked them, you know, what their opinion is if Twitter has free speech. But he only gets several million responses on that. And if you do the simple math, you know, there's over 300 million Twitter users. So for him to have some teeth in his approach, I think he has to have more than a 1%, you know, hit rate on a response like that. So he needs to build up his story more and give us more evidence. I mean, intuitively, I think we all think it would be better for him to have a role in the company, but he needs to back that up with more facts, and that's what analysts want. They want us to have more facts. They don't want to talk about, let's give an example, like the housing. Residential housing has more anti-discrimination rules, frankly, than corporate governance for publicly traded companies, right? I mean, right now what they're doing is they're saying, we don't want to entertain his offer, not because the analytics are poor, but we're afraid of what he will do to the company, and he will change the culture of our company. To me, that's discrimination. It has no grounds unless you can come in with facts and an analytic hypothesis of why you should reject that offer.
Barry, I follow Elon Musk on Twitter, and he tweeted about a day ago, about 24 hours ago, "Love me Tinder," and I'm a fan of Elvis. Maybe it's just that. Maybe Musk was just listening to some Elvis tunes on Easter Sunday.
Yeah, to me, what's sort of amazing about the entire governance structure of Silicon Valley is just how anti-competitive the whole thing is. The super voting rights that exist at a number of these big companies. I don't know how this whole development occurred, but it's kind of shocking. Twitter actually is one of the few companies that doesn't have all these super voting rights, and yet we still see them going to some of the worst strategies from my early days in the business back in the 80s with poison pills and the like. So I'm kind of shocked by Silicon Valley overall and just how anti-competitive the governance is. It seems like a good next book for John or someone, but it's shocking.
Well, you know, I'll throw another point out there that I think, and which relates to this whole anti-governance issue, which is, you know, it used to be that tech was like the great equalizer and anybody could jump in there. And now we live in this world where a few companies just kind of dominate the tech and media landscape. And here we have it again with like Elon Musk, one of our country's wealthiest people, you know, coming and taking over this megaphone of the media. That, you know, in the same way we had Amazon coming in and taking over the Washington Post. I think a lot of Americans feel like just a few people are controlling everything right now.
Yeah, it's a oligopoly. Peter, thank you so much.